Hey, good evening traders. Welcome to the emstrade.com recap video. It is Thursday, February 24th, 2011, and sort of a back and forth day today. The market was digesting the last couple days of moves to the downside, and even though we did sort of digest that, we did have some good range, about 18 and a quarter points, which was enough to capture a little bit of profit today. I hope everybody had a good day. As far as tomorrow's concerned, a couple areas that we should be watching. Definitely in this 93 area. This was a second touch in the Globex session. We came down, made lows down here, and then of course during the regular trading hours we made those similar lows. Back up here in this congestion level, which is we moved into yesterday, that 211 to 212 or 13 area, and then above that the 217 area is what I'm really watching. We get above 217 and then we have a lot of open space to move up from here. But we are in this this Fibonacci zone, the 50% retracement to the 618 retracement. We're just going to have to see if this holds. If we close below the 1293 area, then we could see some more downside into next week, which should be a lot of fun. News out tomorrow. We do have GDP in the morning early, and then consumer sentiment after the opening of the market. Otherwise, let's get on to our last day of trading the trend. Today we're going to look for targets and stops. If you haven't seen these videos, please visit emstrade.com and visit the blog area, and you can pick up the videos that lead up to this last one, targets and stops. So we'll go back, and yesterday we triggered a trade in the excuse me, in the direction of the trend, and now we're looking for some targets once we're in this thing. And so what we do is a lot of people, there's a lot of different types of targets. Sometimes you can have a static target, which would be like a 1 point or 2 point static target that you're going to try to hit every time. Not always my favorite, because depending on the market action and volatility, that can not be the best way. I like to look at swing lows or swing highs depending on which direction you're going. For example, if we were in here at this number 1, which was an aggressive entry, we'd be looking for a swing low down here to take some profit, and it went down and hit. Now if you entered in a more conservative area, number 2, we'd be looking down to this swing low right here. However, this is an awful long way down here, and it could have shaken some people out. You may have wanted to use a different methodology. Maybe once it got past 2 points, you may want to have taken some off at that juncture. So let's move over to the larger time frame, because once I get in a trade, I like to look at a larger time frame for my targets. And again, as we talked about, once we are in this trade at 29, then we're looking for some lows down here, which we found. Okay, and then one of my favorites for a final target is either my levels that we talk about here, or usually I use a 1272 extension, which is a great extension, and it's probably the most widely used number in trading as far as targets are concerned. Now if you're going to press this trade a little bit, you could have, and the way to do that is to trail your stop. You could have used a 2-bar trailing stop, which means that once this hits into this extension here, down here in this extension, you could have moved your stop 2 bars back. So we count 1, 2, and then you'd be right above this 1324.25. All right, once this bar closes and a new bar opens, you go 2 more, then you move it down a little bit more, and of course keep going until you're stopped out, which would have been around the 16 area here. So a very solid way of pushing a trade a little bit longer, see how much you can get out of the trade. If you like taking your profit at a certain level, take it, get it off the board, and then wait for a new trade then. So I hope this has helped, guys, over the last few days. Just a real simple type of setup to look how a setup can be structured. There's a lot of different varieties, and a lot of it has to do with comfort level. But play with it. Shoot us a note over here at emstrade.com if you have any questions. Otherwise, also, I want to remind you we have a webinar coming up next Tuesday. I will provide a link below this video. This is with Matt Davio and Lee Jones. They'll be talking about risk, managing your risk, how to do it in the market. It's the most important thing that you can possibly do. So it'll be an extension of actually what we just talked about here. Otherwise, for tomorrow, guys, have a great Friday. Watch the news. Have a wonderful weekend, and we'll be right back at it on Monday. Take care.